The rally resumes today in the gold futures contract. The June futures contract came back to close at the second highest level ever for the futures contract, that being above 2,400, up about 0.6%. The high today, 2408, that was up 0.8%. The low, 2377.20, that was down a little bit less than 0.5%. This is all after a brief one-day drop yesterday. The volume was light today, but the recovery was at support, so it's still a fairly solid development for those of you that are long gold. On a weekly basis, gold is still up almost 1% and is working on its 8th week higher out of the last 9. 8 higher closing weeks out of the last 9. Since hitting a new low print in the last week of October 2023, gold is now up over 48%. The narrative of no landing in the economy for the Fed is picking up steam, and that's kind of bullish for gold. How is that bullish for gold? Well, we're only talking about two possibilities for the FOMC now, which is a cut and no move at all. We're not talking about hikes anymore, which would be bearish for gold. Cuts would be bullish for gold, and no cuts at all, leaving rates exactly where they are, only exist in the context of higher inflation. So gold being an asset and benefiting from inflation when the Fed is not hiking rates to combat inflation is slightly bullish for gold. So all of this no landing talk, which if you don't know what a no landing is, think of what a hard landing would be. That's the economy going into a recession and inflation coming down. A soft landing would be no recession, but inflation coming down. No landing is inflation and no recession. So that would be slightly bullish for gold as well. Yields also bounced today, but didn't seem to put any pressure on gold, not in any major way. Treasury yields in the US recovered some of yesterday's losses, and we're still up double digits on the week. So you're going to want to keep an eye on that if you are involved in gold as well.